What is happening, tech titans? Welcome back to Qualcomm Pulse, where we dissect the biggest breakthroughs and the hottest market movers. The pace of innovation never slows, and today we're diving headfirst into a whirlwind of groundbreaking developments that are reshaping industries. Get ready for updates that are too big, too bold, and too important to miss. We're talking about the forces driving technology forward at warp speed, and you're getting the inside track right here, right now. Don't blink because the future is unfolding, and we've got the pulse on it. Let's jump into the action. First up, a titan of the semiconductor world is hitting stratospheric heights, fueled by an insatiable appetite for artificial intelligence. We're looking at a company whose stock performance is nothing short of phenomenal, shattering records and setting new benchmarks. What's behind this incredible surge, and what does it mean for the future of AI infrastructure? We've got the deep dive. Then, we shift gears to a crucial endorsement that's sending ripples through the market. An influential voice in financial analysis is doubling down on a major tech player, raising price targets and reaffirming its position as a top pick. We'll break down why this expert sees such significant upside and what this means for investors watching this space. Next, we're tracking a significant market event for a major industry player, marked by massive trading volume. This isn't just any trading day. It's one that has captured the attention of the entire market, signaling major interest and activity. We'll explore what this surge in volume signifies and the underlying drivers. And finally, we're uncovering a strategic alliance that could redefine enterprise cloud infrastructure. Two powerhouses are joining forces, integrating cutting-edge AI capabilities with robust virtualization platforms. Get ready to understand how this collaboration is poised to become a game-changer for businesses worldwide. Stick around, because you won't want to miss a single second of this. Hit that like button, subscribe to Qualcomm Pulse, and ring that notification bell so you never miss an update. AI demand fuels Broadcom's record-breaking surge. The semiconductor giant Broadcom, ticker symbol AVGO, is experiencing an unprecedented surge, with its stock price climbing nearly 95% over the past year and consistently challenging all-time highs. This remarkable performance is a direct reflection of Broadcom's increasingly pivotal role in the global build-out of artificial intelligence infrastructure. The company's strategic acquisition of VMware has also significantly bolstered its software portfolio, creating a more diversified and robust revenue stream. In the most recent fiscal quarter, Broadcom announced record revenues hitting an impressive $15 billion for Q2 2025. Even more striking is the substantial 46% year-over-year increase in its AI semiconductor revenue over the last 12 months. Analysts are particularly focused on a projected 60% rise in AI semiconductor revenue as the next key operational milestone. Should this target be met, it is widely anticipated that Broadcom's stock will surpass its previous all-time high of $300 per share. However, with the stock already priced at near perfection, the critical question on everyone's mind is whether the company's growth trajectory can truly keep pace with these elevated expectations. The current bullish sentiment surrounding Broadcom is exceptionally high, and it's important to remember that hyperscaler capital expenditure trends can be quite volatile, fluctuating significantly from one quarter to the next. Despite this potential for short-term volatility, the overarching strategy remains sound, positioning the stock as an opportunistic investment for both short-term traders looking for quick gains and long-term investors seeking sustained value. When a stock consistently hovers near its peak performance, even good earnings reports can sometimes feel underwhelming if they don't significantly exceed already sky-high expectations. In June, Broadcom provided its guidance for Q3, projecting revenues of approximately $15.8 billion, which was above the consensus estimates at the time. However, the market's immediate focus quickly shifted to the long-term sustainability of this growth, especially given the stock's premium valuation. While Broadcom's strong position in AI is undoubtedly a major advantage, it also closely ties the company's fortunes to a handful of major hyperscale cloud providers. The capital expenditure cycles of these giants can, and often do, influence market sentiment significantly. Recent market reactions to fluctuations in AI chip peers, often triggered by spending headlines, serve as a stark reminder of how sensitive investors are to even the slightest shifts in demand signals. Furthermore, the successful integration of VMware continues to be a crucial subplot in Broadcom's ongoing narrative. This acquisition has introduced a second significant growth engine for the company, primarily driven by its high-margin, recurring software revenue. However, the market is keenly watching the execution of this integration. Key metrics include customer adoption rates of VMware Cloud Foundation, VCF, and the uptake of its private AI services. While initial product traction appears encouraging, the market is eager to see concrete proof of this momentum, translating into tangible revenue growth and consistent contract renewals, rather than relying solely on product demonstrations. This heightened scrutiny is a primary reason why even quarters that meet or exceed expectations might see the stock trade sideways if management doesn't clearly articulate the link between product development and financial outcomes. Given Broadcom's rapid ascent in recent weeks and months, its valuation has understandably expanded considerably. The company's price-to-earnings (PE) ratio on a GAAP basis currently stands at approximately 108, a significant premium compared to the sector average of 29. Even when looking at the non-GAAP PE ratio, which falls to 51, it remains substantially higher than the sector average of 23. These metrics suggest that, from an earnings perspective, AVGO stock could be considered overvalued relative to its current profitability. Looking ahead, Broadcom stock also carries a substantial premium based on forward-looking estimates. The company's forward PE ratio is approximately 66, again, significantly higher than the sector average of 29. Such elevated valuations serve as a crucial reminder to investors that even fundamentally strong companies can experience sharp price pullbacks when their valuations reach extreme levels. Analysts' models forecast revenues in the range of $15 $83 billion for the current quarter, representing robust year-over-year growth of approximately 21%. Adjusted earnings per share, EPS, are expected to be around $1.66, marking a substantial year-over-year increase of roughly 34%. These projections align closely with Broadcom's own guidance, indicating that the market's primary focus after the earnings report will likely be on the company's forward-looking guidance. For the next quarter, Q4, consensus estimates project revenues of $17 billion, assuming demand remains strong, which would signify a significant sequential acceleration in growth. Ultimately, the outlook provided for Q4 will be pivotal in shaping how investors interpret the upcoming earnings report. Broadcom generates its revenue through two primary business pillars. The first is its AI semiconductor division, where management had guided for approximately $5.1 billion in Q3 AI semiconductor revenue. This revenue is driven by the sale of custom AI accelerators and high-speed Ethernet components essential for the major cloud providers. The second pillar is its VMware business. Broadcom has been actively integrating AI-native capabilities into its VMware Cloud Foundation, VCF9, including its private AI services. This strategic move aims to bolster the appeal of on-premises and hybrid AI deployments, particularly for enterprises operating in regulated industries or those with stringent cost control measures. If the attach rates for these new services remain strong and deployment numbers continue to expand, the synergistic combination of AI hardware and recurring software revenue should provide a stable and firm top line for the company. Profitability remains another cornerstone of Broadcom's financial narrative. Consensus estimates project Q3 EPS to be around $1.66, a significant year-over-year increase of approximately 34%. Analysts are modeling even faster growth in Q4 as AI shipments ramp up and the benefits of software leverage begin to materialize. The previous quarter's results reinforced this positive thesis. Revenue climbed 20% year-over-year to $15 billion. Adjusted EBITDA reached $10 billion, representing two-thirds of sales, and free cash flow hit a record $6.4 billion. This substantial free cash flow provides ample resources to fund ongoing growth initiatives while simultaneously enabling the company to return capital to shareholders. Valuation represents the primary point of tension for Broadcom investors, but it also holds the potential for significant reward if execution remains strong. At a P/E ratio of nearly 45 times this year's projected earnings, the stock might appear expensive at first glance. However, this valuation may not be unreasonable for a business consistently compounding sales at nearly 20% annually, maintaining resilient profit margins, and benefiting from an increasingly stable software revenue base. This financial backdrop sets the stage for a potentially binary outcome following the earnings announcement. If Broadcom delivers approximately $15.8 billion in revenue, around $1.66 in EPS, and provides constructive commentary regarding Q4, particularly supporting the narrative of revenues approaching $17 billion, the stock's current premium valuation should be sustainable. Conversely, any faltering in the growth narrative or a lack of visibility into future demand could cause the shares to experience significant volatility, even if the headline numbers meet expectations. Wall Street analysts maintain a strongly bullish stance on Broadcom, despite its prolonged period of strong performance. The stock currently holds a strong buy consensus rating, based on 27 buy recommendations and only 2 hold ratings issued over the past 3 months. The average stock price target set by these analysts is $313.63, suggesting an approximate 5.5% upside potential from its current trading levels. Broadcom's earnings narrative is straightforward in its outline, but challenging in its execution. Sustain the momentum in AI, demonstrate tangible progress in VMware integration through revenue figures rather than just product showcases, and protect profit margins while operating at hyperscale. Management has provided clear performance indicators. AI semiconductor revenue targeting approximately $5.1 billion, Q3 sales around $15.8 billion, and EPS close to $1.66. If these targets are met, and the Q4 outlook trends towards the $17 billion mark, the stock's lofty valuation appears defensible, and the long-term growth thesis extending into fiscal year 2026 remains intact, even in a market that constantly demands validation of performance. However, the current market environment presents a challenging setup. Attempting to buy Broadcom stock on a pullback has proven unsuccessful over the past year. Yet, at its current valuation, even a minor stumble in the company's growth narrative could deliver a significant blow to the bullish investment case. Keep your eyes glued to this space, because the market's reaction to these numbers is just the beginning. Next, we're looking at how a key analyst's confidence is boosting another major player's prospects in the fast-paced tech world. Analyst boosts Broadcom target, citing custom silicon dominance. In a market session where major indices experienced a downturn, semiconductor powerhouse Broadcom, AVGO, managed to buck the trend, closing Tuesday with a slight gain. The company's share price edged up by 0.3%, a performance significantly bolstered by a substantial increase in its price target from a prominent industry analyst. This gain occurred against the backdrop of the S&P 500 index, declining by 0.7% during the same trading session, highlighting Broadcom's relative strength. Well before the market opened, Muse, a respected analyst at Cantor Fitzgerald, made a significant upward revision to his price target for Broadcom. The new target was set at $350 per share, a notable increase from the previous target of $300. Importantly, Muse reaffirmed his overweight, or buy, recommendation for the stock, underscoring his continued confidence in its potential. Furthermore, he maintained Broadcom as one of his firm's select top stock picks, signaling a strong conviction in the company's future performance. According to industry reports detailing Muse's analysis, the analyst attributes a significant portion of Broadcom's expected growth, both in the short and mid-term, to its custom silicon unit. Broadcom has established itself as a leading supplier of custom-designed chips, crucial for enabling advanced functionalities, particularly in the rapidly expanding field of artificial intelligence, AI. These specialized chips are designed to meet the unique and demanding requirements of AI workloads, positioning Broadcom at the forefront of this technological revolution. Specifically, Muse highlighted Broadcom's exceptional opportunities to provide its next-generation custom silicon solutions to industry giants such as Alphabet, the parent company of Google, and Meta Platforms, the owner of Facebook and Instagram. Both companies are heavily investing in AI research and development, requiring high-performance, customized hardware to power their vast data centers and innovative AI services. Broadcom's ability to deliver these tailored solutions gives it a significant competitive advantage in securing lucrative contracts with these major tech players. Beyond its strength in custom AI silicon, Muse also expressed optimism regarding Broadcom's other core division, infrastructure software. He believes that this segment of the business is poised for a significant rebound in the near future. This segment, which includes solutions for cloud infrastructure, data center management, and cybersecurity, is expected to benefit from renewed enterprise spending and the ongoing digital transformation initiatives across various industries. Muse's positive outlook is not an isolated view within the financial community. He is part of a growing consensus among professional Broadcom analysts who anticipate strong performance from the company. Data compiled by Yahoo Finance indicates that, on average, analysts are projecting a revenue increase of over 21% for the current fiscal year, potentially reaching nearly $63 billion. This would represent a substantial jump from the previous year. Furthermore, they are modeling a significant rise in per-share net income, forecasting a 37% increase to $6.67. These optimistic projections underscore the market's confidence in Broadcom's business model, its strategic positioning in key growth areas like AI, and its ability to execute effectively. This analyst's strong conviction is a major signal, but it's not the only indicator of Broadcom's market impact. Prepare yourself as we dive into another key development that's making waves in the trading world, marked by significant volume activity. Broadcom's trading volume surges amid AI-driven growth. Shares of semiconductor titan Broadcom experienced a notable surge in activity, with a trading volume of $5.81 billion on Tuesday. This significant market participation placed the company's trading volume at the 11th highest position across the market for the day, underscoring the intense investor interest in the company. The elevated volume occurred against a backdrop of AI-driven growth, which continues to propel Broadcom's market presence and investor confidence. This substantial trading volume is a clear indicator of the market's focus on Broadcom, particularly given its recent impressive performance and its strategic positioning within the booming artificial intelligence sector. As a key player in providing the essential hardware for AI infrastructure, Broadcom has become a focal point for investors seeking exposure to this high-growth market. The company's ability to consistently deliver strong financial results, driven by demand for its AI semiconductors and its robust software portfolio, has generated significant buzz among traders and long-term investors alike. The context for this surge in activity is Broadcom's ongoing success, fueled by strong demand for its AI-related products. The company has been a primary beneficiary of the massive investments being made by hyperscale cloud providers and other major tech firms in building out their AI capabilities. Broadcom's custom silicon solutions, high-speed networking components, and its recently acquired VMware software suite are all critical elements in this expansion. This broad-based demand has translated into impressive revenue growth, with the company recently reporting record revenues and substantial increases in its AI semiconductor segment. Analysts have widely recognized Broadcom's strategic advantages, often citing its deep relationships with major cloud customers and its technological leadership in areas like custom AI chips. This recognition has led to positive analyst ratings and price target increases, further stimulating investor interest. The market activity seen on Tuesday reflects a confluence of these factors: strong underlying business performance, positive analyst sentiment, and the overarching trend of AI adoption driving demand for semiconductor solutions. The significance of the $5.81 billion in trading volume cannot be overstated. It signifies a high level of engagement from both institutional and retail investors, suggesting a strong conviction in Broadcom's growth prospects. Such high volume often indicates that significant news or trends are influencing trading decisions, and in Broadcom's case, the narrative of sustained AI demand is clearly a powerful driver. This level of market activity also suggests that the stock is attracting attention from a wide range of market participants, from day traders looking to capitalize on short-term price movements to long-term investors accumulating positions in what they believe is a fundamentally sound company. The sheer scale of the trading volume indicates that Broadcom is not only a strong performer, but also a highly liquid stock, making it attractive for substantial investment. This massive trading volume is a powerful signal, but what's driving this sustained investor excitement? Get ready, because next we're exploring a strategic partnership that could fundamentally change the game for enterprise cloud infrastructure. Broadcom forges strategic AI alliance with NVIDIA and VMware for enterprise cloud dominance. In a move poised to redefine the landscape of enterprise cloud infrastructure, semiconductor giant Broadcom has announced a significant strategic integration initiative. This collaboration involves close alignment with AI hardware leader NVIDIA and leverages Broadcom's recently acquired VMware virtualization platform. The core objective of this partnership is to create a more seamless, powerful, and efficient environment for enterprises deploying artificial intelligence, particularly within private cloud and on-premises data centers. The significance of this alliance lies in its comprehensive approach to addressing the complex needs of modern AI workloads. By combining NVIDIA's cutting-edge AI hardware, including its powerful GPUs and AI accelerators, with Broadcom's robust networking solutions and VMware's industry-leading cloud foundation software, the partnership aims to deliver an end-to-end solution. This integration is designed to simplify the deployment, management, and scaling of AI applications, making advanced AI capabilities more accessible and practical for a wider range of businesses. At the heart of this strategy is the concept of private AI services and the enhanced VMware Cloud Foundation, VCF 9. Broadcom is actively seeding its VCF platform with AI-native capabilities, specifically tailored to support on-premises and hybrid AI deployments. This is crucial for enterprises that handle sensitive data, operate under strict regulatory compliance, or require greater control over their AI infrastructure. NVIDIA's technology will be integral to powering these on-premises AI computations, providing the necessary performance and efficiency for demanding tasks like model training and inference. The integration promises to streamline the typically complex process of setting up AI environments. Enterprises often face challenges in integrating disparate hardware and software components. This collaboration aims to mitigate those challenges by offering a more cohesive and optimized stack. For businesses looking to leverage AI without migrating entirely to public clouds, this partnership offers a compelling solution, enabling them to build powerful AI capabilities within their own data centers. Furthermore, the synergy between Broadcom's networking expertise and NVIDIA's computational power is expected to yield significant performance improvements. High-speed networking is critical for efficient data transfer between GPUs and other components in an AI system. Broadcom's advanced networking silicon, such as its Tomahawk line of switching chips, will be crucial in ensuring low latency and high bandwidth, which are essential for maximizing the performance of NVIDIA's AI hardware. The inclusion of VMware's software layer adds a critical dimension of manageability and flexibility. VMware's platform is designed to abstract the underlying hardware, allowing for easier provisioning, resource allocation, and operational management. By integrating AI capabilities directly into this familiar environment, Broadcom and NVIDIA are making it easier for IT teams to manage AI infrastructure alongside their existing virtualized workloads. This unified management approach is a key differentiator, potentially accelerating AI adoption within organizations. This strategic move positions Broadcom as a central orchestrator in the enterprise AI ecosystem. By facilitating the integration of leading AI hardware with its own networking solutions and the VMware software stack, Broadcom is creating a powerful value proposition for its enterprise customers. The focus on private and hybrid AI deployments addresses a significant market need, particularly for industries like finance, healthcare, and government, where data privacy and security are paramount. Analysts are closely watching the adoption rates and the tangible revenue impact of these integrated solutions. The success of this strategy will hinge on how effectively enterprises can deploy and benefit from these combined technologies. If the integration proves successful in simplifying AI deployment and delivering measurable performance gains, it could significantly enhance Broadcom's position in the enterprise AI market and solidify its role as a key enabler of the AI revolution. This powerful integration sets a new standard for enterprise AI. But what's the ultimate takeaway from all this groundbreaking news? Stick around for a rapid-fire recap of all today's top stories and a clear call to action. What a rundown! We saw Broadcom shatter records, fueled by massive AI demand. An influential analyst gave Broadcom a major vote of confidence with a sky-high price target. We witnessed Broadcom's trading volume explode, signaling intense market interest. And a game-changing AI integration between Broadcom, NVIDIA, and VMware is set to revolutionize enterprise cloud. Don't miss out on any of these incredible developments. Hit that like button, subscribe to Qualcomm Pulse for your daily dose of tech insights, ring the notification bell so you're always in the loop, leave a comment with your thoughts, and follow us on all our social channels to stay connected.